If you get a Social Security SSI or SSDI payment, this urgent alert could stop you from losing hundreds of dollars a year starting right now. Financial institutions are discreetly implementing new charges designed to chip away at your benefit deposits each month. We're talking about monthly service fees, balance requirements, overdraft penalties, and ATM costs that are quietly draining the accounts of seniors and disabled Americans. What makes this a crisis? Countless people are seeing $20, $40, sometimes over $50 vanish from their fixed income every 30 days, money they absolutely cannot afford to lose. If you depend on these federal benefits, what you learn in the next few minutes could protect your finances and reclaim your cash. I'll reveal the specific fees to look for, explain why this is happening now, and give you clear steps to shield every single penny. Welcome. Whether you're new or a regular viewer, this channel has one core mission: to defend your Social Security, SSI, and SSDI income. We track every update to payment calendars, every shift in policy, and every risk to your economic stability, so you're never blindsided. A community of beneficiaries trust this space to stay knowledgeable, stay secure, and hold on to more of their money. Today's focus is essential because, unlike official government announcements, these banking fees operate in the shadows. They're hidden in complicated terms, deducted without fanfare, and most folks don't catch on until significant damage is done. But you're watching this, which means you're stepping up to take charge. Before we dive deeper, please do this. Tap the subscribe button and activate notifications right now. Content like this might determine whether you keep your entire benefit or surrender hundreds to fees you never authorized. Alright, let's break down the situation and your defense plan. Here's the reality. Banks have always had charges. That's old news. The new development is how these fees are being designed and the rising focus on the very kinds of accounts where government benefits land. Let me clarify. When your Social Security, SSI, or SSDI payment arrives, it goes straight into your bank account, typically a checking account. For a long time, standard checking was low cost or even free. Recently, though, banks have overhauled their fee systems, and numerous institutions now impose a monthly maintenance charge that can be anywhere from $5 to $15 or higher, depending on where you bank. Now, $15 may seem minor, but if your fixed Social Security income is, say, $250 monthly, losing $15 every month means you're out $180 for the year. That's substantial cash. And here's a key detail: these charges are frequently conditional. For instance, some banks will remove the monthly fee if you keep a minimum balance, perhaps $500 or even $2,500 in your account. But this creates a major issue. A huge number of benefit recipients operate check to check. If your housing costs, bills, food, and medicines consume almost all of your monthly deposit, maintaining a $500 cushion at all times might be impossible. So even though the fee could be avoided in theory, for many older and disabled Americans, avoiding it is practically out of reach. Let's walk through a concrete scenario. Imagine you're 75, single, and receive a $1,400 monthly Social Security retirement payment. Your bank demands a $1,200 in $200 minimum balance to dodge a $10 monthly service fee. On the second of the month, your benefit posts and your balance jumps to $2,400. Over the following weeks, you cover your rent, your heating bill, your car insurance, you buy groceries, and you refill medications. By the month's end, your account holds $150. Since your balance fell under $200, the bank systematically takes $10 from you each and every month. That's $120 annually gone, not from reckless spending, but simply from covering essential living costs. And this person's story is far from rare. Millions are in the identical position, yet there's more. Beyond monthly maintenance, other fees can disproportionately impact those on benefit income. Overdraft penalties are a prime example. If you unintentionally spend a little more than your account holds, many banks will slap you with a $30 to $38 penalty per overdraft incident. Some will even apply multiple penalties in one day if several transactions process while you're overdrawn. Picture this. You believe you have $60 in your account. You spend $30 on food. You put $20 in your gas tank, and you pay a $15 copay at the pharmacy, but you overlooked a small automatic subscription that deducted yesterday. Your true balance was actually $50. Now, all three of those purchases overdraw your account, and the bank penalizes you $36 for each one. That's $108 in fees on top of the $5 you actually overspent. It's crushing, and it occurs constantly to people on fixed incomes, particularly when deposit dates change or surprise bills appear. Next are ATM fees. Using a cash machine outside your bank's network often costs $3 to $5 per withdrawal. Do that a couple times a week, and you could be losing $30 to $100 monthly. And don't overlook paper statement fees. Certain banks now charge $2 to $4 per month just to mail you a physical statement. If you're uneasy with digital banking or lack internet, you're forced to pay that fee merely to review your activity. There are also charges for using your debit card abroad, fees for certified checks, wire transfer costs, and penalties for dipping below minimums in savings accounts. All these small amounts accumulate, and when your income is fixed, each dollar is critical. Now you might be thinking, why is this occurring? What's driving banks to act this way currently? A few factors are at play. First, shifts in interest rates and financial rules have pushed banks to seek new revenue streams. Fee income is a major contributor. Second, banks assume that many individuals, especially older adults, won't change banks. There's loyalty involved, or perhaps the perceived difficulty of updating direct deposit information. So, banks raise fees confidently, believing customer loss will be minimal. Third, let's face it, the details are confusing. Fee charts are lengthy and complex. Most people don't detect the charges unless they scrutinize their statements. And even then, they may not grasp what triggered the fees. But here's the vital truth. These fees are not inevitable. You have choices, and you possess the ability to safeguard your benefits. So, let's discuss your actionable plan. First, and most important, you must identify every fee your bank is applying to you. Grab your latest bank statement or access your account online if possible. Inspect each line item. If you spot items labeled as maintenance charge, service fee, monthly cost, overdraft penalty, or similar, note them, tally them up. Understand your monthly loss. Once you know what you're paying, phone your bank, request an explanation for each fee. Ask how you can avoid them. Sometimes, merely inquiring can get a fee waived or guide you to a different account category with lower fees. Numerous banks provide specialized accounts for seniors, veterans, or Social Security recipients. These accounts commonly feature reduced or zero fees. But here's the twist. The bank rarely volunteers this information. You must ask. Say, do you offer any accounts tailored for benefit recipients or no-fee options for seniors? If your present bank's options are poor, it's time to explore elsewhere. Other banks and credit unions provide totally free checking accounts with no balance minimums, no monthly costs, and no overdraft fees if you decline overdraft coverage. Credit unions in particular are often far more cost-effective than large national banks. They're owned by their members, meaning their goal is to serve, not to maximize profit. Many offer free checking, low-cost savings, and superior service. Digital banks are another excellent alternative. Without physical branches, their operating costs are lower, and they share those savings via no fees and better interest rates on savings. Institutions like Current, Varo, Ally, and Capital One 360 provide free checking with no monthly charges, no minimums, and access to huge networks of zero-fee ATMs. I understand that changing banks can feel daunting, especially after years with one institution, but the process is simpler than it appears. Here's a roadmap. Step 1. Open your new account. This can usually be done online or at a local credit union branch. Step 2. Arrange direct deposit with Social Security. You'll need to contact the Social Security Administration, either by phone at 1-800-772-TATIV13 or via your official My Social Security account online. Supply your new bank's routing and account numbers, and SSA will begin sending your benefits to the new account. The switch generally takes 1 to 2 payment cycles to complete. Therefore, keep your old account open initially. Wait until you confirm at least 2 successful deposits into the new account before proceeding. Step 3. Transfer all automatic payments and recurring debits to your new account. Update your details with utility providers, insurers, and any company that automatically withdraws funds. Finally, once everything is migrated and your benefits are flowing to the new account, close the old one. Ensure no pending transactions remain. Then request written closure confirmation for your records. Now, here are extra strategies to fortify your defense against fees. Decline overdraft coverage. This might sound wrong, but consider this. Overdraft protection permits the bank to approve purchases when funds are insufficient and then fine you for it. If you decline, the transaction will simply be denied if money isn't available. Yes, that might be awkward at the register, but it's far better than a $35 penalty. You can opt out by calling your bank or visiting in person. Establish account alerts. Most banks allow text or email notifications for low balances. This helps prevent overdrafts and monitors your spending. Stick to your bank's ATMs. Avoid foreign network machines that impose fees. If your bank has scarce ATMs near you, think about moving to a bank or credit union in a wider ATM alliance. Choose electronic statements if possible. If your bank charges for paper, switch to online statements. If internet access is a problem, ask a relative or friend for occasional help checking online, or visit a branch monthly for a printout. And crucially, audit your account every single month. Don't just peek at the balance. Examine transactions and fees closely. Catch issues early before they multiply. I must also highlight a critical point. Federal law shields Social Security funds from being taken for most debts, but that shield does not cover bank fees. If your bank levies a charge, they can deduct it directly from your account, even if that account only holds benefit money. So protecting yourself from fees isn't merely about saving, it's about ensuring your benefits remain under your control. Look, I realize this is substantial information, and it's aggravating that you even face this battle. You contributed throughout your working life. You paid into the system. You earned these benefits. Now you must guard against institutions chipping away at your monthly check. But here is the empowering part. You have authority. You have alternatives. And by acting today, you can secure your income and keep more of your money where it should be, with you. This channel exists to support you in that mission. Each week, we deliver news on Social Security, SSI, SSDI, policy shifts, payment timelines, cost of living increases, and dangers to your benefits like the one we covered today. We aim not to frighten you, but to equip you with knowledge so you can make optimal choices for your financial safety. If you haven't subscribed, please do so now. Click that subscribe button and strike the notification bell so you're always updated, because our next video might save you more cash, help you sidestep an expensive error, or deliver vital information that protects your benefits. Your financial stability is paramount, and staying informed is your strongest shield. Okay, let's summarize today's crucial points. Banks are levying fees that can shrink your Social Security, SSI, and SSDI funds. These include monthly service charges, overdraft fines, ATM costs, and others. They can total hundreds annually, and they are often preventable if you know the steps and act. Your action plan is straightforward. Review your existing account and its fees. Question your bank about no-fee alternatives. Contemplate moving to a credit union or online bank. Reject overdraft protection and check your account monthly. Don't permit financial institutions to take money you rightfully earned. You deserve to retain every dollar of your benefit income. If this video was useful, please give it a thumbs up and share it with anyone you know who receives Social Security, SSI, or SSDI. This knowledge could profoundly impact their life. And remember, my channel is always here for you. We'll continue bringing you the updates, the alerts, and the guidance you need to stay protected. Thank you for watching. Look after yourself. Stay knowledgeable.